With reefer madness sweeping the nation, our next guest is a legendary investor who says the cannabis craze is just getting started. Now, you may know Danny Moses of The Big Short fame. He was one of the investors who shorted subprime before the financial crisis a decade ago. Now he's calling the cannabis industry the big long. He joins us now. Danny, why is this such a tremendous opportunity? And when you say it's the big long, do you think it's going to be a more profitable opportunity for you than betting against subprime was?
Well, I think shorts can only go to zero, longs can go up to infinity, so that's just the first category. The second is that I've never seen a sector have the political tailwinds, the economic tailwinds, and the wellness tailwinds that this sector potentially has. And the really interesting thing about the U.S. companies, the multi-state operators Tim was just talking about, is there's no debt. So the Big Short was full of over-levered, under-regulated businesses. These are over-regulated and under-levered businesses. So it's really tremendous. So when people look at valuations, I think you have to look at each company. And there's many states in the U.S. that are bigger than Canada alone. So I think people's first taste or, iteration on the exchanges here on NASDAQ and NYSE have been with the names in Canada. That's the way they think that you play it. But there's many other ways to express the trade.
And just to be clear for people at home, I mean, they don't have debt because they can't have debt. There's no bank that will lend to them currently. But when and if that changes through the States Act, through the SAFE Act, what happens at that point? How do you start evaluating multi-state operators and what their strategy should be to expand?
So right now, if you look at the names, they're doing private small debt transaction converts. They're really giving up way too much equity, more than they would ever want to. So the SAFE Act, which actually came out of the House subcommittee yesterday, would actually have the provisions in it that would just give the green light to allow banks to start lending. And there's two things banks can do. Banks can service these clients, obviously, and then everything from payroll to keeping their cash somewhere, using Visa cards maybe or MasterCard would be great. And then also the ability to issue debt. And I think we've already seen the big Wall Street banks be advisors to several companies, Constellation deal, obviously, Scotts Miracle-Gro, and they're very involved in the M&A aspect of it. And I think they're looking for an excuse to come into the space. And if you were to get debt to come in, the cost of capital would go down dramatically for these companies. And so I think that's a really interesting play that people aren't really focusing on right now.
And Danny, so in that regard, so valuations are going to come down with it. Ultimately, who benefits the most from debt coming into the industry? Or more importantly, if you think that's where we're getting to, and I agree with you, and we're working on stuff together, you have a dynamic here where there's certain sectors that will outperform. Where do you want to be right now for this phase of development?
I think you want to be in the U.S. multi-state operators right now. There's several names that are out there that are in 6 states, 9 states, 12 states expanding. The biggest problem has been it's a chicken and egg because the investors know they have to issue equity. Many of these companies, they won't buy the equities because they realize look at an opportunity to buy them cheaper. So I think if you can find the companies with the best assets out there and look what the opportunity set would be to issue debt instead of equity for growth, I think it's tremendous. So the enterprise values are underestimated dramatically.
We were just showing some of your picks, and not a Canadian operator was up there.
Correct.
Yeah.
I just think they're expensive. I'm not short them. They're difficult to short anyway. But I think the U.S. names are much cheaper on a relative basis.
So let me ask something. There's so much debt money looking to be placed in all kinds of things. Why are they not in here? Is there a lot of money available to stop that up?
Sorry. Tim knows there's private debt out there, but the terms that they're getting, it's great right now if you want to be the one to lend money. You can get warrant coverage, you get extra stock, you get options, and you're talking 15, 17%. That's just the stated rate. The cost of capital is much higher, above 20. I think that the Goldmans and Morgan Stanleys of the world are going to be looking for an excuse to do it once they see the green light to do it. And then I think you'll have an institutionalized debt market for this stuff, and you'll have a wave of high-yield issuance with real assets. And I think that will be, from a valuation perspective, a very attractive asset class.
Danny, are you seeing an ecosystem develop around this in the background, waiting for the regulation? You know, there's like Ease, the Uber Eats of delivery out in California. Are you seeing like some really interesting tech plays on this right now?
Yeah, there's so many different facets of the trade. There's tech companies, delivery, just like you mentioned. There are, Uber apps basically for trimmers to go to a field and trim. There are so many different aspects. There's guys that came from TrueCar that are looking to basically apply that type of technology because you can't do traditional advertising, obviously, in the sector. You can't go on Google. You can't do those things. So there's a lot of workarounds, but a lot of smart Silicon Valley people are entering this trade now, and it's really going to make it much more efficient. So it's a real greenfield right now.
My quick question would be, a lot of great news. I mean, we're talking about all the good things. Are there any bad things that could happen on the political front, regulation front, or is that just a foregone conclusion that's just going to get pushed forward.
We had an analyst yesterday from Raymond James saying this is Tulip Mania 2.0 or 3. Whatever version of mania that you want to put on that.
Right. I don't agree with that per se, because I think this is a much more secular trade than it is cyclical. Guy, to answer your question, there are risks. And every time I'm investing or looking at these companies, I have to remember that it's federally illegal still. It's not so much I worry about my reputation as much as what could go wrong with the company. So corporate governance, we've seen a few companies go through some issues with that. And obviously the market's going to punish you. If you're a cannabis company and you do something improper in your corporate governance, you're going to get hammered, and you should, because it's hard enough to find the right companies in this space without having to worry that things are not running well at the top. So,
last quick question. Of your entire portfolio, can you give us a sense of what % is invested in stocks that trade versus private equity investments, VC, et cetera?
So it's probably 60 to 70% private equity. Merida Capital is where I have a lot of my investments in that. And in the public markets, using that knowledge from the private markets and applying that to the public, there's some great opportunities out there, I think. But it's nice to be in the private markets and have much longer duration and not have to worry about what the stocks do every day. But I think this is going to be a very great opportunity on the long side, and I think really excited to see how it develops.
Well, Danny, we hope you'll come back.
I'd be happy to. Thank you for
Danny
having
Moses.
me.
What's your take?
No, some of the volatility is sort of almost being taken out again. I mean, cannabis growth is back to levels we saw a few months ago. GW Pharma, very, very quietly, by the way, has gone up about 52% over the last month and a half. The stories are real. There's no question about it. And it's just a question of when market participants start to really embrace it. And I think that's sooner rather than later.
I think what you're going to see very quickly in the public markets, first of all, you're going to see there's a wall of money that's chasing hemp. There's a bunch of deals that are coming, and I think those will be interesting ways for the public markets to play. But as Danny pointed out, look at the ancillary, look at B2B, look at procurement, look at logistics.
Packaging.
I mean, these are ways. Packaging, we both sit on the board of a company that does a lot of packaging. So that the bottom line here is look beyond cultivation. Look beyond just growing the plant. As Danny pointed out, you've got the most sophisticated people in the software world and whatnot coming here, setting up right next side, and it's a very sophisticated consumer product story, and that's where it's going.
Dan was talking about the deliveries, and I have a question that maybe one of you guys can answer, and that is, if you're delivering an illegal substance within a state that is medical, that's perfectly,
Why are you coming
that's
to
fine.
us? What?
No, not you.
Okay.
Tim and Dan. Could that company go public? That company could go public, correct?
If it's legal within that state,
Yeah.
but again, where could it go public? And the issues we
Right.
have are, is the NASDAQ ready to do that? Is the New York Stock Exchange ready to do that? You've seen a lot of these companies going to Canada, and these these RTOs have been good and bad for the industry, frankly. I mean, the bottom line is a lot of people have invested in companies that are just another big listing away from seeing that share price go down 30%, because that's the nature of the capital structure.
Yeah, I hear ease works very good in California. That's all I'm saying.